makers and market movers. This is The Pulse with Francine Lacqua.
Good morning and welcome to The Pulse. I'm Kriti Gupta in London, in for Francine Lacqua with the conversations that matter. Here's what's coming up on today's program. Nvidia announcing its next generation of AI accelerator chips, vowing to upgrade its technology every year. GSK shares dropping by the most in almost 2 years after a U.S. court ruling said it would allow jury trials in its Zantac case. Plus, CEOs and regulators of the world's largest airlines gathering at the IATA AGM in Dubai. We are live on the ground with the latest on supply chain issues and the demand story. In the meantime, a quick check on the European markets here because it is broadly higher. Is this a catch-up trade that we are seeing from over in the States? Remember, you had that last 30-minute rally in the S&P 500 on Friday, but then also the Nvidia story. Your best performing sector this morning, at least in European trade, is the tech story, and that's going to be crucial. We'll dive into the details in a little bit, but you can see that is a story that is really bleeding into almost every single country, every major market that you are seeing in the European session. In the meantime, a quick check on these cross-asset stories because like I said, it is green on the screen. When you look at the stock 600, you see a move higher by 0.3%, pairing some of its initial gains, but still nothing really to scoff at. Some of that green on the screen also bleeding into the American session. I'm going through all the regions of the world. The American session flat at the moment, 52.96. How much of that is paring back what you saw on Friday? Meanwhile, in the currency space, euro dollar 108.38. We have that crucial ECB meeting that we have on Thursday. Cuts basically priced in. Is that doing anything to the currency? We're going to dive into the details throughout the hour. And of course, Brent crude slightly stronger, nothing to write home about. But again, did have that initial drop coming off of the OPEC meeting over the weekend, really talking about those cuts. Let's go a little bit more micro, zoom in just a little bit more as well, because there's a couple of stocks you want to keep on your radar. Nvidia is one of them, higher by a whopping 2.4%. Remember, over the weekend, Jensen Huang talking about releasing more AI accelerators every year, really increasing that design cycle, similar, at least to me, to what Apple used to do, releasing a new iPhone every single year as it was ramping up some of its production stories. So now they're talking about releasing a new one in 2025 and a next-gen platform called Rubin in 2026. Those shares higher by about 2.3%. A quick check on AMD as well. Advanced Micro Devices, one that usually trades in sympathy with Nvidia, this morning is taking a little bit of a pullback, down about 0.2%. But again, how much of this is simply some sort of opportunity cost between Nvidia and AMD? Again, is it going to catch up then as we start to see a little bit more volume in the U.S. session? Right now, trading at about $167, we'll call it. Meanwhile, healthcare getting a lot of attention this morning. GSK and Pfizer are two that we've got our eye on. But first, GSK down about 9.4% after a Delaware court over in the States said that they're now going to be introducing jury trials into this court case as Zantac could potentially cause cancer. At least those are the allegations that are now being argued out in court. But the idea that there are now jury trials and real people affected as part of this court case, down by 9.4% in the stock. Sanofi as well, down 1.7%. And finally, let's talk about GameStop here, because that seems to be the retail trade that we continue to see. Pfizer as well, down about 0.6%, like I said, but GameStop higher by 85%, a whopping 85%. This coming after Keith Gill, also known as Roaring Kitty, Post showed a $116 million bet. Does that retail trade then pair as we get a little bit more institutional volume at the beginning, or as the beginning of the U.S. Open is really what we want to call it? I've wrapped a ton of stories. Let's see what's on the top of our minds when it comes to the investor base. Charlotte Ryland, as I think the proxy of that investor base, head of investments over at CCLA Investment Management, joins me this morning. Charlotte, I feel like every time I'm on the show, I have the pleasure of your company, and I'm thrilled to have it. Our audience just got a ton of information from me. What's standing out to you this week?
Well, I think, as you say, I mean, Nvidia continues to be the story of the market. It was the story of the market last year as well. I mean, I think it's up sort of over 600%, but earnings actually have been following that way as well. It's not really a re-rating story. It's very much about that earnings coming through. As you say, they had a successful launch of the Blackwell product, and they're talking about the next product coming up. So, I mean, one of the worries about the market would be, was there going to be this air pocket between products? But it seems at the moment they're managing that quite well, and there continues to be very strong demand for these chips.
And that, of course, is strength at the moment, does then become a weakness in the future. That's something to be discussed in a couple of years' time. But, Charlotte, I'm curious about this Nvidia story. That it's a short squeeze. It's a momentum trade as much as it is a fundamentally driven trade as well. When does the party stop?
Yeah, and of course that's the great debate, and so far it's been sort of right to stick with it. I mean, I suppose where could those air pockets come from? It could be the product cycle and a pause. It could be that, the big spenders, the Amazons, the Alphabets, the Microsofts of this world say, actually, we've spent billions on this already. We need to be spending on other parts of our business. Maybe they pull back on that CapEx a little bit. I don't think so far it's going to be a competing product. It seems like this is absolutely the ecosystem that people are going for. Or it could be just, we just can't build endless data centers. Power is one of the things that people have been talking about, and how you power these things. You can't just build millions of them.
But that's a fundamental story. Is there a liquidity story here as well? I mean, given that the hyperscalers are driving 45% of Nvidia's story, to me, that feels like the cash sitting on the balance sheets of Apple, Microsoft, Amazon has really just been transferred to Nvidia.
Yeah, I mean, so far they've managed to keep margins going, and they've made cuts in other parts of their business. And these were businesses which probably had quite a lot of fat to cut anyway. But at some point, probably, yes, they are going to have to invest in other bits of their business, and that might be where you get that pause from.
Talk to us about this bond market then. When we connect the dots of the stock market and the bond market, I'm old enough to remember a time when yields were jumping, they were getting higher, and every single tick higher created some sort of sell-off in the stock market. And that affected the heavy techs that were really affected by that discount rate. That doesn't seem to be the case. That relationship doesn't seem to be as strong as it once was, say, 2-3 years ago. Do we see some sort of revamp in this higher for longer rates environment?
I think, the market's sort of come to accept that we are at higher rates. And if you look at things like the utilities or the real estate sector, certainly that's being priced in terms of the higher discount rates. I suppose what's happening with tech is that you're still producing very strong earnings growth. And so that's sort of outweighing what you're seeing. I mean, we did see, back in 2021, there's a lot of froth in terms of the zero profit tech. That stuff has never really come back. But where you're talking about established players like Microsoft, which have great margins, and great growth, they can withstand that sort of higher discount rate.
It's interesting. When we're talking then about the Federal Reserve and where they're getting this higher for longer rates narrative from, it's stemming from the consumer resilience story over in the States. But then if you look at the data, there are pieces where we're starting to see a little bit of a slowdown. Markets, to me, at least for me, Markets 101 is the markets, especially the stock markets, pricing something in 6 to 9 months later. Why is it so sensitive then to every retroactive data point?
Yeah, I mean, I suppose the market still seems to be sort of grappling with, is inflation going to be bigger than they thought? Is growth going to be slower than they thought? I think probably the reality is that we've got yields up to a more sensible level. We spent a decade with them being artificially suppressed at incredibly low levels. Now they're more sensible, where they should be. Is inflation going to drop dramatically or expand dramatically from here? Again, probably not. So maybe you're not going to have huge moves in interest rates, and actually maybe bonds will stay roughly where they are today.
More sensible levels. So are you going by the historical norm then? I mean, we've had 2 decades of these very low rates, and I think a lot of people have been saying, look, where is the ceiling in these yields? And talking about a 10-year at potentially 5% before it heads down to 3%. Now we're talking more about a floor in yields. What is that floor in your view?
Yeah, I mean, I think we probably don't think it falls much below sort of 3.5%, 3%. Because, I mean, if you think about, you've got an inflation rate of 2, you add in a bit of a sort of real gap on that, maybe link that to GDP, you're probably getting up to sort of 3.5%, 4% anyway. So,
over what time frame?
Over the 10 years or whatever. But, I mean, it is...
Come on, Charlotte. That's an easy way out.
Exactly. Look, I'm much better at picking out equities than I am telling you where the bond yield's going to go.
That's fair. All right, well, let's go back to the equity story then. When we're talking then about this defense sector, this seems to be the story, at least in Europe, where every star is starting to see this rearmament. In our last couple of hours of programming, we had guest after guest saying, yes, this is absolutely a political story. You're seeing this massive political momentum for rearming Europe in particular, especially in the face of a potential Trump 2.0. It's not showing up in the equity market on either side of the Atlantic. I'm curious why that is.
I mean, I think in terms of defence stocks, they've certainly done pretty well already. And I think you're right. That's going to have to be, particularly from Europe, where we haven't really spent particularly heavily. We have relied very much on the US. And, we probably are going to have to sort of push up that spending in what is going to be a more volatile world. I mean, we've got Ukraine and Russia, but we've also got, of course, the situation with China and the tensions that are emerging there. I mean, the market, again, flip-flops in terms of whether it worries about geopolitical risk or whether it thinks it is not an issue. And for the moment, it seems to be calm about it. If you see something happen in Taiwan, say, that would be the moment where everybody would get themselves worried again.
But there seems to be, and this is what I'm trying to rack my brain around, is there seems to be a fundamental narrative, of course. Geopolitical tensions are high, where we're talking about 2 wars in this region as well, rearmament stories, etc. There seems to be a more clear return on investment, and I don't mean to make as gruesome of a connection here, because, of course, it is a tragic story that war is on the rise. But from a defense perspective, they're still not rallying. The stocks aren't rallying to the same extent to say your Nvidia's, for example, even though the return on Nvidia is still a couple years out. This is all kind of still momentum at the moment.
Well, I think in Nvidia there is real earnings coming through and there is real margin improvements coming through. I suppose for the defense companies, the problem is always, these are very long projects. There's lots of changes that go on through the projects as they sort of develop the new products and the new weapons or whatever it is that they're spending on. Government budgets are not flush. There's a lot of demands on those government budgets, and perhaps that's where that lack of confidence is coming from.
All right, Charlotte Ryland, Head of Investments at CCLA Investment Management, joining me this morning. We thank you so much. Coming up on the program, we're going a little bit more macro here. OPEC Plus extending some of their cuts, but laying out plans to bring those barrels back. We're live in Riyadh next. This is Bloomberg.
Your laptop, your future PC will become an AI. They'll be constantly helping you, assisting you in the background. The PC will also run applications that are enhanced by AI. And your PC will also host applications with digital humans that are AIs.
Nvidia CEO Jensen Huang speaking in Taipei on how embedded he thinks AI will become. And look, the market's heard his message loud and clear. There is still plenty more demand to come, plenty more products to come from Nvidia. Those shares higher by 2.3% in the pre-market. As we see more traders hit their desk, it's likely to increase when we see that volume. Remember, they are talking about a new product in 2025, that Blackwell Ultra chip, and then a next-gen platform in 2026. Advanced Micro Devices getting some of the love as well, higher by 1.4%. They're announcing their future of AI chips and will speed the rollout of those new models as well. There is a race to the top here, especially between those two companies. Now, that is the tech story. We've got plenty in healthcare as well. GSK shares have slumped in the wake of a court ruling that the UK drug maker, alongside others, including Sanofi, must face trials over whether the former heartburn treatment Zantac causes cancer. Joining me now from our equities team, Joe Easton, all over the story. Joe?
So we are seeing a big drop in GlaxoSmithKline shares, as you say, Critty, down around 9% here in London. That is the biggest drop in 2 years for that stock and by far the biggest decliner on the stock 600 this morning. We're also seeing some weakness in Sanofi as well, another marketer of the Zantac anti-acid treatment that you mentioned in the intro there. Now, we'll just remind you some of the details. This Delaware court ruling over the weekend says that the companies will have to face around 75,000 claims that Zantac caused cancer among users. Now, Delaware, of course, is important given its long-standing jurisdiction and guidance for other courts across the US. Now, Zantac was said to cause the cancerous effects according to these cases. However, recently we did see a judge in Florida rejecting this, and that actually spurred some hope that this wouldn't actually be ruled on by the Delaware court. So that is why the market's seeing it as a bit of a shock today. Analysts at Deutsche Bank describing it as a massive curveball. Meanwhile, analysts over at Bloomberg Intelligence saying there could be up to $4 billion in claims related to this. And we're going to bring up the GSK share price on the screen. We have seen a bit of a recovery in that stock. Back in 2022, we saw it plunge as news of these cases emerged. It's since recovered following that Florida ruling. But as I say, this is a bit of a shock for that stock today. And we're seeing lots of traders getting out of that one. The volume surging at the open of trading as well. The other one to keep an eye on is Pfizer in the US pre-market, another company that marketed Zantac, seeing some very small movements lower in that stock. But as such, not too much in terms of the volume on that one at the moment. Down 0.2%. But the biggest move, of course, in GSK with that 9% decline, the biggest fall in 2 years for that company in London.
All right, Joe Easton from our equities team, we thank you so much. In the meantime, we did tech, we did healthcare. Let's get a quick check on those oil stocks as well. Remember, the commodity story has been leading the stock 600 lately, and that's going to be something that we watch very, very closely. Your BPs, your Totals, your Shells, all trading higher this morning off of course, even though you don't see as much volatility in the underlying commodity. Brent crude trading at an 81 handle. This coming off of OPEC Plus setting out a plan to restore some production as early as October, despite concerns over the demand outlook and robust supply from beyond the group. Let's bring in Bloomberg's Horizons anchor Jumana Bersachi joining us from Riyadh. Jumana, walk us through the logic of this weekend.
Yeah, well, I think the starting point over here, Kriti, is that there was a lot of complexity already in place about the extent of the production curbs that had already been introduced by OPEC. And let me just break down what I think the highlights are. At a group level, these OPEC plus production cuts are going to stay in place until the end of 2025. So we got that clarification. But the other big question for the market is what was going to happen to those voluntary cuts. Those are the ones introduced in November 2023, not by all member states, only by 8 OPEC countries. And many of those countries actually were represented here in Riyadh yesterday. They physically came for the meeting. And what we found out is that those voluntary curbs are only going to be extended for another 3 months until the end of the third quarter of 2024, after which they will gradually start to get phased out. So that was initially a bit of a bearish surprise to the market, namely because essentially OPEC were signaling that they're ready to start putting barrels of oil back into the market once again. However, the caveat here, Kriti, is that they also have added subject to market conditions, which tells you that OPEC, as ever, are very keen on supporting this market, but at the same time satisfying many of the member states within OPEC who'd been calling for bigger production capacities. And one of the big winners actually was the UAE. They managed to carve out more production for themselves. They're going to increase production by 300,000 throughout the course of 2025. So they're treading a fine line here. They want to satisfy some of the countries within OPEC who've been calling to boost production and gain some market share. But at the same time, as ever, they do want to keep a lid on prices. And I think the price action this morning is pretty telling, because at the end of the day, oil price hasn't moved that much, even though they're signaling that more barrels are coming by the end of this year.
And of course, the plans going into next year as well. A lot to digest there. Connect the equity picture for us as well, because Aramco also had a $12 billion stake sell out just hours after the deal opened. Why does that matter? Why do we care?
Yes, so Aramco, this is their secondary share offering, and as we know, the IPO was the largest in the world, happened in December 2019. They raised $30 billion at the time. So this book opened, they're looking to raise $12 billion over by the time the books actually closed. But what became apparent is that there was very, very strong demand, even in the first couple of hours of them launching the process. A lot of that, you have to think, because it was a Sunday, has been met from some of the international, some of the regional and domestic players. But now the book building process is continuing through the international community. And we've written a story this morning. Our colleagues on the ground, Matthew Martin, alongside the team, have written a story about how Aramco are actually in London this week. The CEO, Amin Nasser, is there. His CFO is there, meeting with international investors to help shore up interest in the secondary offering. And the key here, Kriti, is whether or not the international community will get involved. Back at the IPO, it was only 23% allocation to foreigners. The question is, will they be enticed by this higher dividend yield that Aramco are promising?
Certainly something we'll be watching very, very closely. Bloomberg's Jumana Bersetchi joining us out of Riyadh after the OPEC Plus meeting. We thank you so much. Coming up on the program, we continue our tour around the world as 370 million people prepare to vote in this week's European elections. We're going to walk you through what's at stake. Stick with us. This is Bloomberg.
I think lots of it is at stake.
This election is the most important election since 1979.
What is at stake is the future of Europe.
I think there are a lot of other issues too, like migration, the Green Deal, the competitiveness of the EU. But I think Ukraine will be the defining issue.
I do think that every nationalist party and sovereignist party in Europe are going to score.
What we are facing right now, if there is, for example, a surge of the far right, that the whole European project is basically going to be put in question.
Key figures from the EU's biggest political groups underlying what's at stake in this week's elections to the European Parliament. Far-right parties aiming to make big gains in those elections when voting opens on Thursday. Let's get more of Bloomberg's Oliver Crook standing by in Berlin. Ollie, walk us through what the polls are telling us.
Yeah, Kriti, the voting starts on Thursday. It goes through Sunday. It's going to be all countries of the 27 members of the EU. And what we're seeing, largely speaking, is that the center will hold. The center-right is going to get the most votes. The EPP, that's Ursula von der Leyen's party, coming in second will be the Socialists, again, with the two biggest blocs. But where we're going to see a lot of motion is more around the side of the Greens and the Liberal parties, Macron's party and the Greens, who are going to lose some speed. The Greens are really going to come under intense pressure in the benefit of these right parties. The ECR, Giorgia Meloni's party, and the far right, the ID group that used to hold the AfD here in Germany, and Marine Le Pen's story. And the question is, how is this going to actually affect the policy of Europe going forward? Broadly speaking, you could see a massive shift from all of this sort of focus on green energy, a lot of money that was put aside to that, going towards things more like defense spending, where there is a lot more consensus within the EU. Where it gets interesting on defense is that we speak often of the support for Ukraine and support for defense build-out in the same breath. That may not be the case under some of these far-right parties.
Certainly something we're keeping an eye on. Bloomberg's Oliver Kirk reporting out of Berlin. We thank you so much. Coming up on the program, we are back in Dubai at the IATA AGM. Guy Johnson on location with the CEO of Pegasus Airlines, getting her thoughts on her state of the industry. That conversation next. This is Bloomberg. Nvidia announces its next generation of AI accelerator chips and vows to upgrade their technology every year. GSK shares dropping by the most in almost 2 years after a U.S. court ruling said it would allow jury trials in its Zantac case. Plus, CEOs and regulators of the world's largest airlines meeting at the IATA AGM in Dubai were live on the ground with the latest on supply chain issues and the demand story. Good morning and welcome to The Pulse. I'm Kriti Gupta in London. We want to kick it off by talking about some of the pre-market movers in the U.S. because already you are getting quite a few. GlaxoSmithKline down a whopping 9.4%. GSK, of course, Sanofi as well down 1.2%. A lot of that in reaction to that Delaware court case suggesting that they're going to bring jury trials in on the allegations that Zantac did indeed cause cancer. So you are seeing a pretty big drop in the healthcare space as well. So that's one sector we're watching in addition to tech as well. Aviation is another. Like I said, a fairly broad rally that you are seeing kind of emerge in the stock market, at least on this side of the Atlantic. Airlines, a pretty decent chunk of that as well. So you can see going across the continent, you are seeing some green on the screen. Plus, of course, the chief executive of Air France-KLM saying sourcing parts for aircrafts has been one of the main supply chain issues. CEO Ben Smith spoke to Guy Johnson at the IATA conference in Dubai.
We've got 180 wide-body airplanes in the group. We've got maybe 5 or 6 that we're holding back a little longer, not just to keep a little bit of a reserve, but also older airplanes that were missing parts, which is an issue from some of our suppliers. We've got at least some extra airplanes for backup. I mean, that's one of the things I can add to our list of issues and getting everything back to where we were. Is in the supply chain, we are having trouble sourcing parts for interior cabins, for engines, that type of thing.
Now over to the man of the morning, I will say, Guy Johnson joining us from Dubai with another guest. Guy, over to you.
Kriti, thank you very much indeed. Let's pick up on that issue of what is happening with the availability of aircraft, what's happening with the supply chains, the availability of parts. Basically, what is happening out in the aviation world is if you're a Boeing customer, you are struggling to get the aircraft because Boeing can't deliver the aircraft that maybe you want. If you're an Airbus customer, then maybe things are a little tricky as well. If you are a Pratt & Whitney customer, an Airbus customer, you are not getting the engines you want, and as a result of which you're facing some of the similar challenges. However, on the A320 family, the narrow-body family from Airbus, there are engine choices. Some went with the Pratt & Whitney aircraft engine, others went with the CFM engine. One of those that went with the latter, which is not experiencing problems, is the Turkish low-cost carrier Pegasus. Guliz, Ozturk is the CEO of that business, and she's sitting right next to me. Good afternoon.
Good afternoon.
Nice to see you again.
It's a pleasure for me.
Look, here we are. We're coming into the summer season. Some of your competitors can't get the aircraft they want. The engines that they bought, if they're Pratt & Whitney, aren't on their aeroplane, so they can't fly them. You don't have that problem. You've got an Airbus fleet that is a CFM fleet as well. You're going to have that capacity on this summer. How big an advantage is that?
Yeah, that's true. I mean, that was the decision taken back in 2012 when we had placed the order of, at that time, 100 aircraft for Airbus Neos, and then we placed another 50 by July last year. So it's in total 150 aircraft for Airbus. And also, at that time, the decision was taken to get the CFM LEAP-1A engines. We were the launch customer guy at that time when we had given this decision. So right now, in terms of engines, we do not have that problem, which the peers or the industry is facing. In terms of aircraft delivery, of course, we face some delays, but which are manageable, I have to say. I mean, it's like several weeks for that. So for an airline, which actually plans its capacity, it's all its sales strategy, a year, maybe more than ago. So delivering the aircraft on time and without grounding it or grounding it unexpectedly is a big pain. So we're in an advantageous situation, I have to say, looking into the summer.
So are you able to keep the capacity on? Are you therefore able to take advantage of what is happening in the market? What does the market look like this summer?
Let me just give an overview of the first 4 months. For the first 4 months, in terms of demand and capacity growth, we had grown our capacity about 23% vis-a-vis last year, 4 months. And then we took passenger growth of 27%. So this is a strong demand, again, for this year. And looking into the forward bookings, we see this demand continuing. So I'm optimistic that our capacity in hand, which is planned already, we're having 16 aircraft this year from Airbus adding into our fleet, and the demand is there. So we are in a right shape for this summer.
Michael O'Leary is talking about fares being maybe a little softer over at Ryanair than he anticipated. Are you seeing that?
Yes, in a way, because right after the COVID in 2022, we had a revenge travel mood of the customers. So what we are putting on the table as an additional frequency or a capacity, they bought it whatever the price is. Now, by mid-23, we're facing that the pricing environment is getting to its normals. So I have to say that pricing environment is not as strong as 2022, but being an LCC, we're there. Going back to our, going back to our basics. That the customer is after for the lowest, most affordable fare.
You're not flying to Israel right now. Do you think you'll fly to Israel this year?
No, we don't fly to Israel since 10th of October last year. And this year we have taken out all flights to Israel until the end of this year.
And you put that capacity elsewhere?
We put that capacity elsewhere to some European destinations, some new destinations in Middle East, and adding new frequencies to the current destinations.
What would it take you to put those flights back on into Israel? Do we need to see a peace deal?
I mean, it's very difficult to make a projection from where we stand right now, but last year we were expecting to start maybe by the mid of this year, but now we have replaced all Israel capacity, which is about 2.5% of our total capacity, into the other destinations and now on their own sale.
Talk to me about what happens next. You have taken a lot of Airbus aircraft recently. You have a mixed fleet, though. Many low-cost carriers operate a single-source fleet. You go with Boeing or you go with Airbus. Are you thinking about going in that direction, i.e. you become an all-Airbus fleet, for instance?
Guy, the issue is this. Now, we are running 105 aircraft right now. 10 of them is Boeing. And those Boeings are with the fleet. Why? Because once the COVID is over, we have seen this demand, and we have to meet this demand with the capacity growth, and that comes with the aircraft. But there are lots of supply chain issues, delivery delays. So this was simply to keep those aircraft to meet the demand of the customer. So normally we would take them out of the fleet by the end of next year. So we now prolong that period, and we will keep the Boeing. And since we are 50 aircraft running back in 2016, we managed to run dual fleet, and we are the low-cost operator globally. I mean, our low CASK, cost per ASK, is the lowest last year globally, so we can manage that, and we want to keep it to meet the demand.
But the ultimate objective is to phase those aircraft out.
The ultimate plan is to be the single aircraft.
So you're aiming to be an all-Airbus fleet?
Yeah, and 80% of it is Airbus right now.
So are you looking at ordering new aircraft, and presumably, therefore, you would be ordering new Airbus?
We will be. I cannot say it's so sharp because until the end of 2029, yes, that's true, we will be getting another 64 Airbuses into our fleet, and they will be all Airbus 321s. Beyond 2029, we have to work on a new order. When we see the demand here, we want to grow the capacity.
When would you have to place that order?
I mean, in the coming time, like
next
months. I mean, that depends on our analysis and study.
But it's still a live competition between Airbus and Boeing.
Yeah, that's also, of course, the opportunities are there, yes.
Right, so you could still go back to a mixed fleet, is what you're saying?
That's something that I cannot say right now, because if I say it right now, that will be a decision before all these analyses and the studies.
But I guess the question I'm really asking is, you won't rule that out. You still want to have that competition between Airbus and Boeing?
I think nobody can rule that out, yeah.
It's great to see you. Thanks for stopping by to see us. As ever, always a pleasure. Thank you very much indeed. Guliz, Ozturk, the CEO of Pegasus. Kriti, back to you.
Guy Johnson there on the ground in Dubai with the CEO of Pegasus Airlines, talking about some of those capacity issues still ahead. We'll have plenty more conversations around those very issues from top voices at the IATA AGM. Guy's going to be speaking to the CEOs of Virgin Atlantic and United Airlines later today. Conversations you do not want to miss. Now, coming up on the program, stocks, bonds, and the Rupee surge as Narendra Modi looks set to win a decisive majority in India for the third time. We're live from New Delhi for the latest. This is Bloomberg.
Europeans are heading to the polls to decide the makeup of the EU Parliament. On the ballot, economic growth and industrial policy, migration, and the geopolitical challenges facing the bloc. Stick with Bloomberg as we bring you the latest election updates from across the continent and analysis about what it means for the region and beyond. Tune in all week for continuing coverage leading up to the election results on June 10th on Bloomberg Television. Context changes everything.
The conversations that matter and the insights you need. This is The Pulse. I'm Kriti Gupta in London. Let's get a little bit of election coverage here. India stocks surging to a record while the Rupee and sovereign bonds climbed after exit polls signaled an emphatic victory for Prime Minister Narendra Modi's ruling party. Let's get the latest from New Delhi. Bloomberg's Medika Doshi live on the scene. Medika, walk us through the takeaways here. Of course, market reaction taking it very, very positively.
That's right. We're having a record day in India's markets today, as you pointed out, Kriti. And that's because the exit polls that were released over the weekend suggested that Prime Minister Modi's government will return and not just get past the halfway mark of 272 seats, but in fact, the average of the exit polls puts his government at about 365 seats. That exceeds what his party had won in the previous elections in 2019. What investors are reading into this is, of course, continuity. It's a word you're going to hear very frequently over the next few days here from India if those exit poll results do prove to be true. But they're also looking at a government that has been fiscally conservative, that has held the economy in reasonably good shape through the course of the pandemic and thereafter, that's invested heavily in infrastructure and is pushing hard for foreign companies to come to India and invest in manufacturing. If all of that gets doubled down on over the course of the next 5 years, then that bodes well for the Indian economy, which just closed FY24 at about 8% in terms of GDP growth.
And in terms of policy, if Narendra Modi is indeed selected for his third term, as the polls suggest, what does that mean? It feels like infrastructure spending is, of course, a major one, but what else are we looking for?
Well, Kriti, this has been a supply-side-led government or an investment-led government for the last 2 or 3 years. This has been a one-pony trick government as well. The big boost to the economy has been government spending. What we need in India to pick up is consumption, especially rural consumption, private investment, which has been stuck at a moderate level for the last couple of years, but most importantly, jobs. So whatever the government focuses on over the next 100 to 200 days will have to center around fixing these concerns. Though they have scored well on other regards, these are the concerns that continue to be central to the economy. And this is what we hope to hear from a new government, whether that's Narendra Modi's government or a different one, as we will find out tomorrow when the votes are in fact actually counted.
All right, Bloomberg's Menika Doshi bringing us that update live out of New Delhi. We thank you so much. And she said those key words, continuity, and that seems to be one of the things that are actually helping markets in India. They're not necessarily helping markets in South Africa. The ANC has begun talks with rivals to form a government after its worst election performance since 1994. Now, the rand is a little bit stronger this morning as investors digest the results. Joining me now, Bloomberg's Jennifer Sabasacha giving us a little bit more context. Jen, as we speak, we are getting headlines here out of Moody's saying that the vote outcome may bring policy uncertainty and that coalition could complicate policy execution. That's the view out of Moody's. Talk to us about how significant of a blow this was for the ANC.
Right, Kriti, I think Moody's is reflecting the sentiment of a lot of people right now because we really are in this sort of fork in the road. As you mentioned, of course, this is the first time the ANC in 30 years has suffered such a humiliating, as some people are calling it, blow. But the big question really and the focus is who now is the ANC, potentially the ruling party ANC, going to work with? Now, if we take a look at the parties that came just after it in terms of their support, there's the main opposition party, the Democratic Alliance, as you can see there. And the real story is what became the third biggest party, which is former President Jacob Zuma's party, the MK party. And the question is, what are the potential coalitions going to look like? What is a coalition going to look like in order to continue this continuity, as you were mentioning, Kriti, because that is really what investors want to see here, and that is what this economy needs. But if we look at some of the policies of some of these parties that are up there right now, they're pretty far apart. So that is why these coalition, these negotiations that are happening now are going to be key to pay attention to.
That's certainly something we're going to be watching very, very closely. A quick check on what the investors watching this, though, are. I mean, what are they most sensitive to when it comes to, now that we have this coalition story, are we expecting a little bit more, centrist views, nationalization? What is the market going to be sensitive to?
I think that is why we are, seeing the reaction right now in terms of the rand you mentioned, Kriti, and the expectation is that we could continue to see some volatility and the rand really potentially bearing the brunt of the uncertainty because of this. Now, just from an investor perspective, going into this election, the favorable outcome was potentially the ruling party teaming up with the DA, which is seen as more market-friendly, more pro-business, and there is some hope potentially that is where the ruling party will decide to go. But of course, there is historical disagreements between these two parties. So if not that, would there be another party come in, some of the more extreme leftist parties, as you were mentioning, Kriti, who have demands not just for nationalization, you were mentioning there, that are things that they've been talking about on the campaign trail, but also the MK party has asked for the President Cyril Ramaphosa, to step down if they are to form a coalition. And so I think just with the investor sentiment, as we're watching what is happening right now in the markets, people are trying to interpret maybe where these discussions can go and really who or which parties are going to need to make concessions in order to form this government. And there's only 2 weeks that they have, Kriti. So we should just brace ourselves for more volatility, I think, in the near term.
More volatility, that, of course, showing up, and even the bonds providing the juiciest yield in all of the EM world right now, of course, accounting for that volatility and that geopolitical risk. Bloomberg's Jennifer Sabasaja, we thank you so much for breaking that down for our global audience. And speaking of that juicy yield, that's where a lot of investors, EM investors especially, go to Mexico, where Claudia Sheinbaum is set to become Mexico's first female president in a landslide victory. 3 exit polls projecting the former mayor of the nation's capital and candidate for the ruling Morena party won between 55 and 63% of votes. Now, the coalition of opposition parties that had ruled the country for nearly 90 years is seen to be winning between a quarter and a third of votes cast. Now, off of that, you are seeing some weakness in the Mexican peso. Again, that story of continuity that both Jen and Menica were talking about in various other parts of the world, very much applying to the Mexico story as well. Now, coming up on the program, we go back to the G10. S&P has downgraded France, citing the government's missed goals to restrain the budget deficit. We're going to dive into the details next. This is Bloomberg. And of course, a story that's catching our eye on both sides of the Atlantic is going to be GameStop shares trading by a higher over 80% in the pre-market story. This coming in the context of Roaring Kitty, otherwise known as Keith Gill, posting a position on Reddit for $116 million that would allow him, basically through call options, to buy the shares at about $20 a share. Now, you can see since he's done that, GameStop now trading at about $42 a share. But just for some context, he's never really posted on social media in recent years. And so to see that kind of revelation really pushes the retail bid up that are getting involved in the get-go. We'll, of course, see if the institutional bid remains as we go into the U.S. Open. But for now, GameStop, again, really making itself known higher by almost over 80% in just the pre-market. That's an equity story we're going to be watching alongside some of the other favorites of meme stocks, Bed Bath & Beyond, for example, among various others. I want to get back to the macro story here, where when we're talking on both sides of the Atlantic about the fiscal situation, debt comes up over and over again. It's also proving to be the Achilles heel over in France, where the S&P has downgraded the country's sovereign debt rating from AA to AA minus. Now, the ratings agency is saying that the French government has missed its goal to rein in the budget deficit, which is set to remain above 3% of GDP in 2027. Let's bring in Bloomberg's William Horobin joining us out of Paris. William, this is something that Bruno Le Maire was quite confident about, that he could get that budget deficit down below 3% in 2027. Is this just the S&P, the credit rating agency, saying, we don't believe you?
Yeah, the big problem here for Bruno Le Maire and the French government is that they missed their budget deficit reduction targets by quite a large margin last year because there was disappointing tax receipts, growth was much weaker than expected, and it's just become a very difficult situation to imagine being able to get to this sort of holy grail of 3% budget deficit by 2027, which is the end of President Emmanuel Macron's second term. And so that would require sort of unprecedented levels of spending cuts. And we're in a country that hasn't balanced a budget since the 1970s. So S&P's decision was essentially that they're not going to make it, and debt is going to continue rising over that horizon.
Yeah, William, and as we speak about that, I mean, you're looking at the euro, which, of course, is responding more to the inflation data than anything. You're not even seeing that much of a reaction in the bond market or even in the CDS market as well. Bloomberg's William Horobin joining out of Paris for a little bit more context. Now, that does it for me. Up next, Bloomberg Brief with Danny Berger and Manus Cranny, in New York. They're going to walk you through, of course, the pre-market stories. They've got their eyes on GameStop, Nvidia, and, of course, all the drama on this side of the Atlantic as New York wakes up. Stick with us. This is Bloomberg.